You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. Last week we got together, we did a huddle up, myself and Mark Longo from Options Insider, answered a lot of your listener questions. We had a really great show. It was a lot of fun. It always is to answer listener questions. So this week we're right back into the swing of things. We've had a slew of earnings. The bank earnings overall were a positive, I would say, and a lot of the banks reacted positively. A lot of times it seems like when banks announce earnings, unless they blow them out of the water, the stocks have a tendency to go down in price after a big run up. They've had such a solid year so far. But a big news here is really the VIX index being down below 16% implied volatility. We are taping Options Playbook Radio. It is Wednesday, October 20th. The markets are rocking and rolling as we tape this show today. And we're seeing the VIX right around 1550. But more importantly to me, I'm going out to November, December, January of next year. And we're seeing also the futures contract come down precipitously overall. In November, we're actually below the 20% level, which is interesting to note. And then we're hanging around that 20% level as we go out further in time. So a lot of the angst is coming out of the marketplace. I think a lot of it was caused by the debt ceiling, which was going on in our government. They decided to kick the can down the road, and that relieved a little bit of the angst overall. But in general, the S&P 500 index is looking a little stronger than the NASDAQ, and this week we have earnings in all the FANG stocks. So Netflix announced earnings yesterday. They're down a little bit on the news today. Next week we have two big ones. We have Google and we have or Alphabet, and we have Amazon at the end of the week. Google is going to be announcing earnings on the 26th after the close, and we're going to look at a trade that's going to take place before earnings. So I'm going to do something a little different this week. I am actually going to look at a skip strike butterfly heading in to Google's earnings. So I'm not going to play with the volatility of that earnings report. We have Google down today. Right now it's trading at $2,837.43. It's down $27.31 on the day. And I'm just going to look at a real short-term speculative trade, not meant to be a recommendation, as always here on Options Playbook Radio. But we're going to look at going out of the money on Google. And instead of selling an out-of-the-money call spread, we're going to do an alternative to that, where we're going to bring in a smaller net credit, but we're going to give ourselves a tad bit of upside. So right now, if I'm going to set these skip strike butterflies up in general, which is an alternative to a short call spread. I always want to know what the marketplace thinks the potential move could be on that underlying stock. And right now, if I look at buying the most at the money call and buying the most at the money put, that's trading right around $30. We'll call the market 28.40, just around up. So 28.70 is an expected move. This could happen before this expiration, which is October 22nd, this Friday. So we're going to actually buy that 28.70 strike call. We're going to then sell the 28.80 strike call. We're going to skip to 28.90, which would make the butterfly. And then we're going to buy the 2900 strike call. That is done for a net credit at the midpoint of 15 cents at this point in time, with the markets rocking and rolling. And since we're skipping the 28.90, in that instance, we're going to be creating a requirement in your account. We're going to have risk from 28.90 to 2900. That's 10 points of risk, or $1,000. Now, on the way up, we have a little bit of protection. And this is part of the thing about doing skip strike butterfly in an expensive stock, especially just on a one butterfly basis, 1 by 2 by 1. The time premium has to go away. So if the market does start drifting towards your short strike, you have the benefit of the fact that you are long the 28.70 and short one of the 28.80s. That's just a long call spread. We're doing it for a net credit of 15 cents. It means that if the market stays where it's at or goes down, we can make 15 cents. Not anything to write home about, but you're not losing money on the trade. If all the options expired worthless, you'd make that $15 less commission for every 1 by 2 by 1 that you did overall. So this is just a little bit of a different twist. We've had some volatility in the marketplace. It has came down a little bit. The NASDAQ stocks haven't done quite as well last couple of weeks in general. Market's looking a little bit stronger overall. But this is just an interesting trade because next week we're going to be looking at Amazon. We're going to have earnings on Thursday. We usually look at a earnings trade right around Amazon, just something kind of fun that has to deal with the fact that Amazon always announces on Thursday and the option contracts expire on Friday. So it's going to be a little short and sweet. We don't really have a trade to review because we had a huddle up last week. But to review the trade right now, we are taping Options Playbook Radio. It is the 20th. The market is open. Amazon, or Alphabet, if you want to call it Alphabet as opposed to Google, is down 27 points, trading at 28.37. We're going to be buying the October 28.70 strike call, selling 2 of the 28.80 strike calls, and then buying 1 of the 2900 strike calls. We're going to look to do this for a net credit to the account of 15 cents or $15 less commissions overall. You will have a $1,000 margin requirement to put this on, but that risk only really applies at expiration from 28.90 to 2900. That last points in the width of the spread on our skip strike butterfly. So that's it for this episode of Options Playbook Radio. If you have a topic you'd like to discuss on the show or a question you'd like us to answer on the program, you send them directly to me at theoptionsguy@invest.ally.com, and we'll try to address them in one of our huddle ups overall. Also, if you'd like to learn more about what we do at Ally Invest, you can always follow me on Twitter. I tweet about all those events. My handle is very simple. It's just at my name, at Brian Overby. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.